Good morning, welcome to the ADS Securities Markets Update. Beginning with the Chinese developments today, the trade balance surplus increased by almost a record, reaching by the most since February, rising to as high as 60.24 billion in August, up from 40.03 billion in July, which is also higher than the market estimated, which was around 48 billion. However, the bad news also came in from the exports, which fell by the most also for the second month in a row, declining by 5.5% after another decline of 8.3% the month before. And moreover, the import also declined for the 10th month in a row, declining by also minus 13.8%. In Japan, there were also some good news, as the Q2 GDP, or the final GDP reading, has been revised even lower to minus 0.3, or sorry, higher to minus 0.3 instead of a decline of 0.4%, and the current account surplus unexpectedly increased toward 1.32 trillion yen in July, up from 1.30 trillion yen in June, while the estimates were to decline or to narrow back toward 1.25 trillion yen. Finally, in Australia, the business confidence index also eased back to 1 in August, down from 4 points in July, which is also the lowest since February of this year. The US dollar also declined sharply during the Asian session after the release of the Chinese data, and the dollar index also failed to break above its 50-day moving average right after the US jobs report on Friday, and now the index is also trading below its 100-day moving average again. The technical indicators are also turning lower gradually on the daily chart and most of the time frames, which also keeps our bearish outlook valid for the coming days. The next obstacle support stands at 95.45, which is the support area here, in addition to the 95.13, which represents its 200-day moving average. Going to the European and the US session today, there are a few minor economic figures will be released throughout the day, which are unlikely to have a notable impact on the market, but at the same time, the Chinese effect is likely to continue throughout the day, in addition to the first trading day for the US also after a long weekend. Going to some quick technical analysis today, and as we mentioned also on Friday, starting with the euro. The euro managed to remain well above its 50% retracement on the bigger cycle from the recent lows of 1.0463 toward also the almost 1.17, which basically also a confluence with the 100-day and the 50-day moving average, and continued to advance on Monday and also earlier this morning, reaching as high as 12.20 until this report is released. In the meantime, the technical indicator is also turning higher gradually on the daily chart and most of the time frame, which also support our bullish outlook as long as the pair continues to trade above 110. Going to the British pound also, which also managed to rebound on Monday and also earlier today after it managed to hold above its 51.60 support area, which is a former support also during May of this year, which stand at 51.60, reaching as high as 53.50 earlier this morning after the Chinese data. And in the meantime, the pair is testing its 200-day moving average and trading slightly above that resistance, which should be watched very carefully, as a break above that resistance may grant another rally toward 154 and even 1.55 in the coming days. Finally, the Japanese yen, or the dollar yen, also our outlook remains bearish as long as the index stays below 120. The technical indicator is also turning lower gradually again on the daily chart and most of the time frames, and the next obstacle support stands at 118.30, which should be watched very carefully, as a break below that support would clear the way for further decline and could be heading toward also the last lows, which basically we've seen in the past few days. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching. I'll see you once again tomorrow.